I've been playing around with options a little bit, and I mentioned that I'd sold some puts in Ford. Ford's a perfect example of one that it's still up 50 some percent on the year. But it had a pretty decent correction from 1646 all the way down to 1309 where it's at right now. And I actually sold some puts on this. I'm waiting for them to expire next week. If they just so happen to expire, so be it. I think that this is going to be something that if they do expire and I end up having to take shares on, I'm very comfortable holding Ford shares at $13. You guys can see that I have this 13 that sold puts at 13. So if this ends up expiring, I have to take on the shares. I'll get assigned them, and that's fine by me. And this is going to be another prime example of something that, even though the market hasn't seemed to have corrected, something like Ford is correcting. And this could be a really good opportunity going into the end of the year and maybe even to the beginning of 2022.
So when you say selling puts, is that like shorting when you say you're selling to short?
Sort of. So when I sold these puts, I took on a credit. So essentially I sold 5 contracts at $13. So when this expires, and if it's below 13, I'll have to more than likely take on 500 shares of Ford, which is fine by me because I don't mind owning it. But if it closes above this, whatever the credit is for, I'll still get somewhere around $160. So this is kind of like more of a conservative play for Ford. Gives me an opportunity to get an entry if it expires. The expiration date's on September 17th. So if it does that, then I kind of get a decent entry, especially if it comes down to 1260. That would be great. But it just gives me an opportunity to either get a decent entry on Ford or just take the money from the puts in and of itself. So it's not really me shorting it. If I was shorting it, I would have bought the puts, but I sold them instead.
Okay, so you're banking on, when you sell puts, you're banking on the stock to go up?
Yes.
Okay, so you may not know the answer to this question. I'm just curious because when I think about calls and puts, I think about the stock going up, stock going down. I didn't realize you can sell them. So just curious, why would you not buy calls? Is there like more potential value in selling puts?
There's just greater risk. So if I just, and shout out to Don, I just saw him
Greater
show
risk
up.
for which one?
So there's greater risk for buying calls, because then they could expire worthless by the time the expiration date comes up. Like looking at Ford, this is something that I actually was looking to own. And rather than just buying the shares, this kind of gives me a little bit of insurance. So if Ford ends up by September 17th, which is my expiration date, if Ford is below $13 by that expiration date, then there's a pretty good chance that I'll more than likely have to take on these shares. So then I'll be owning shares of Ford. I'll be owning 500 shares of them. And then there's that difference, that $160 difference thereabouts. So, I'll be, let's just say it comes down to 1250, I'll be down a certain amount of money, less the $160, because I've already got that money that, as far as the credit's concerned. So by selling these puts, I was already given $160 credit. And then if I end up having to take the shares on and I'm sitting at a loss, my average is actually going to be halfway decent because it'll be at $13 less the $160 credit.
Gotcha. Yeah, I continue to try to understand options. I'm just not yet comfortable, clearly, and like not knowing that you can sell puts. It is really hard for me to wrap my head around.
It's definitely like learning a foreign language for sure. And it's still something that I'm sure, like, this is the first time I traded any puts in 10 years, because I was in the same boat. Like, I'm just like, whatever, I'm just going to buy them straight up, make it easier. This actually gives you a little bit of an insurance policy, because best case scenario is you walk away with $160 because that's what the credit was for selling these contracts. Worst case scenario is you have to take on the shares, and you might be sitting at unrealized, in an unrealized loss if it's lower than $13 by the time the expiration rolls around. But the insurance is that you at least got that $160 credit just for selling them in the first place. And so even though you might be down, it wouldn't be as being as red as you were if you just bought them straight up at $13.
Yeah. It's interesting because outside of Don from Don Francho, obviously everybody who, like, a lot of people who did options raked last year.
Yeah.
I mean, pretty much anything you were in the market. I don't know many people who've like. I know there's just such wild swings. I've seen some people make money, but also lose a ton. Outside of Don, I haven't seen anybody consistently. I know there's ways to like hedge, which I think ultimately, when I get into options, it'll be from a hedging perspective, not necessarily like solely in options.
Yeah.
But yeah, there's definitely a lot there, and it's all the like strategies and well, it's just so much when you get into it. It's crazy.
Yeah, there's definitely
put credit spread.
Yeah, there's definitely obviously ways that you can just, lose all of your money and even owe money. But this is actually something, and you would probably like this because, it's a way to either generate income because you're going to get the $160 anyway, or whatever the credit is. And then, if it's on a stock that you like anyway and it expires below the strike price, which is the $13 in this case, you're going to own the shares, and then you can either choose to sell them for a loss or hold on to them because you got a really decent entry on it. So like, if it was Apple or Amazon or whatever, there's a good solid companies. If you're doing it with a penny stock or something like AMC, that's when people get themselves into trouble.
Yeah. Well, yeah, I mean, I get how it works. I just not sure how it works or how it's successful in a strategy. So looking forward to hearing more about that. How has it gone for you thus far? Have you been successful? Have you made money? Are you still, is it just, you're just still in positions right now or what?
Yeah. So I'm still in this contract. I haven't bought it back.
That's your first contract?
Yeah. So this is my first trade, my first trade on, in 10 years on options, so I ended up selling this put, or selling, the put in five puts in at 13 strike price with the expiration of September 17th. So 2 weeks from now, we'll see how it goes. Right now I'm up on it slightly because, the strike price is at $13. Right now it's sitting at $13.10. So I'm only up like $20 or something like that, but we still got time on our side. If this continues to go up, like I said, best case scenario is I collect $160. It's basically free money, or I get a relatively decent entry on Ford if it's below that in a couple of weeks.
Yeah, gotcha. Vinay said, Don said, don't buy it back, exercise it, and then we'll sell calls against it. I was trying to get a little convoluted.
You can do that too, which is, and he's explained this to me too, and I've been really trying to study up on it, but it's called a wheel strategy. So like I'm really starting to understand the selling of the puts part. It's the calling them back, and then the other half of the wheel strategy that's really kind of got me thrown for a loop too. So like again, it's like trying to learn a foreign language, but we'll get there.
Yeah. Vinay said, should I tell them about the $1,000 move on 1,000% move on Amazon contracts? Maybe. I don't know the answer to this, but you remember when Amazon was sideways for a year?
Yeah.
I wonder how that did for options, because I feel like sideways is when an issue becomes with options. I could be wrong, but Amazon definitely has been a monster, but we've been waiting for about 8 months for it to be a monster.
Yeah, it depends on what your strategy is for something like Amazon that does move sideways, because if you're just looking to own shares of it, kind of like in the case of what I'm doing with Ford, if you're just looking to own shares of it, then there is a way that you can do it, safely. But if you're trying to, go crazy and play with the decay of contracts, then that's kind of like when it gets you in trouble moving sideways. It just, everything expires worthless, and then you just end up losing money. So yeah, there's ways to go about doing it. You just have to know how to speak the language, which I'm still slowly learning how to do.